morning, good afternoon, good evening. Thanks you for joining. I guess we wait another minute or two and let the people join, and then we get started. Let's give another minute. So let's kick off. Good morning, good afternoon, and good evening. And thank you so much for joining our second tax committee webinar. We had the first webinar last night, just 14 hours ago. The benchmark is high, and we are very excited to have with you the second tax webinar on the very same topic, taxation of the arts, sports, and entertainment. I feel honored, and I'm very pleased to introduce the panel, the members, the speakers of this panel. First, Gibran Noshad from India. Maybe Gibran, you can quickly.
Hi, everyone.
Thank you for joining. Yushi Hegawa from Japan. Thank you, Yushi. We have Amira, who is stuck in immigration and will join a little bit later. And we have Neil Russ from New Zealand.
Hello, everyone.
And we are still waiting for George from the US. He is actually right now in Singapore.
I'm here. Hi.
Oh, welcome. Hi, George. I'm Thomas Meister, and I'm also very pleased to introduce our session reporter, Seong Shi from Malaysia.
Hi everyone, Seong Si here.
Welcome, everybody. Let's get started. What's the subject matter we are talking about today? Sorry for that. We are talking about a special tax regime. And actually, we are talking mostly about Article 17 OECD Model Convention. Its title is Entertainers and Sportspersons. And I take the advantage, attending yesterday's first panel, actually, Adrian told us that the historic background of this provision that actually started in the 30s of last century, about 90 years ago. At that time, it seems, there was a famous Swedish actress, Ingrid Bergman, who was playing in many, many Hollywood movies and was very successful. And the US, they didn't see any ground to tax the income of this famous actress in the US. Although she was on Hollywood, they could not tax it. And therefore, the treaty between Sweden and the US was amended accordingly, that the US could actually tax Ingrid Bergman, which probably created some revenue as she was the main actress in Casablanca and also in Whom the Bell Tolls from Hemingway, together with Cary Cooper and Humphrey Bogart. It seems that worked for some years, but about 20 years later, there was another struggle between Sweden and the US. There was a very excellent Swedish boxer who was actually boxing in the US and who was winning many box fights. And he was smart. That means basically he didn't get anything, but the company he formed got a lot of money for winning the box fight. And again, the US could not tax that company. And again, the double tax treaty was amended. That's the historic background. And we are going to talk about this special regime all along during this webinar. Okay, sorry for that clicking. What are the subjects we're going to approach? Of course, the first one is who is the taxpayer subject to the regime and who is not? Who will levy the tax, collect the tax, pay the tax? What income is subject to the special regime? How the tax is levied, exemptions, treaty application, and if there is any time left, we're going to address also VAT and GST. Let's start with a case study. And I guess Amira is not yet on. Let me introduce this little case. We have a global arts and sports expo in one jurisdiction, an international festival hosted by that jurisdiction, country A. It's organized by an event co, which is headquartered in country B. And this year, the features is a lineup between artists on one hand and athletes, sports persons on the other end. That means there is an Ed Sheeran concert and there is a UFC fight event in parallel. Ed Sheeran concert, I hope you all know Ed Sheeran. He is a globally renowned artist and he has to perform on stage. And as you might expect, there will be a big audience attending the concert. And he's not coming alone. He has quite a large crew supporting, building the stage, sound engineering, and whatever it takes to have an Ed Sheeran concert on the spot. On the other hand, the UFC fighting event, fighters from the US, Brazil, Europe, and other jurisdictions coming to this event location, fighting for the medal. And they get well paid for doing that. And some of them actually got lucrative endorsements with all kinds of advertising, merchandising, broadcasting, and so on. That means an art event, a concert, and a sports event, a fight. Now, let's approach the very first question, the first topic. Who is a taxpayer subject to the regime and who is not a taxpayer? Maybe Yushi, may I ask you to give some thoughts to this question?
All right. In this case, obviously, Ed Sheeran will be offering a performance, music performance, and the UFC is offering the fight, and they're earning money. So the taxpayer, meaning the person who finally bears the tax, should be Ed Sheeran or UFC, or they may be a personal company owned by Ed Sheeran or the entity running the UFC. And that these persons will bear the tax. And assuming a scenario where, for example, Ed Sheeran's personal company receives certain fees from the, for example, source country's operator, meaning Japan, and then Ed Sheeran receives his own remuneration from his personal company. Then, because the Ed Sheeran's income derives from Japan, Ed Sheeran himself can be a taxpayer. And of course, as to, for example, sales of tickets and the sales of merchandises, I think generally this revenue or income will be first attributed to the Japanese operator, and then the Japanese operator will be paying a certain fees or royalties to Ed Sheeran's personal company or to the UFC entity. In that sense, the Japanese event organizer can be also a taxpayer. Well, I'm sorry to say that as to the sports bettors and the betting platforms, we unfortunately do not have a similar structure in Japan because these are all prohibited under law. So there's no question. So maybe some other panelists will be more appropriate to handle these persons.
Thank you very much, Yoshi. And I understand in Japan, if it's something forbidden, it's not taxable.
That's right. You're absolutely right.
It's consistent. But maybe, Gibran, what about India? If this event is taking place in India, Bombay, New Delhi, or anywhere in India, what would be the rules?
So, Thomas, thanks for having me here. In India, you have a notification that has come out in 2000. So India follows the OECD model basically, and it relies on Article 17, which is basically source-based taxation. And in line of Article 17, India came out with a notification in 2000, which says that if there is a close connection of the performer with the jurisdiction where the performance is taking place, then taxation will take place accordingly. So we have to keep a few things in mind here when we talk about India or I believe any other jurisdiction. Article 17 and Article 15 both have to be seen together. So here, if the performer is carrying out performance without being in a contract with a performance entity, then it will solely be taxed as per Article 17, and the performer will have to pay the tax. Otherwise, we have the interplay of Article 15 and Article 17, and the company which is employing the performer will have to pay tax in some cases along with the performer or in some cases alone. And the jurisdiction will depend again on where the company is situated and where the performance is taking place. So to sort out this issue to a certain extent, what India has done is through the notification that came out back in 2000, India mostly relies on Article 17. And so essentially, the performer is supposed to pay tax, of course, subject to the requirement that, there is a close connection between the taxable revenue and the performance. So you would exclude, ancillary activities, say a promotion which is not related to the event from the ambit of taxation. That happens. But in India, there is a specific mention of DTAAs as well. So, because you have multiple issues relating to permanent establishment and where the entity of the performer is based. So India specifically mentions DTAA and says that any taxation that takes place on the performer or the performing entity would be subject to the tax treaty that is established between the performer's country and between India. So we'll have to take that into consideration as well. And so essentially, yes, in India, it's an interplay of Article 17, but we'll also have to see Article 15 and the DTAA of the country from where the performer sort of is and where he belongs, where he's a resident.
Thank you very much, Gibran. If you do not mind, let me challenge you a little bit. If I'm not mistaken, chess was invented in India, and there are famous chess players in India.
Yes.
If there is not a concert and not, let's say, a fight, if there is a chess tournament in India, would playing chess be subject to the special regime, or would it be outside the special regime?
So playing chess would be subject to the special regime. The special regime in India is the way it is worded, it is quite expansive. The notification that we have in India is also quite expansive. So chess would come within that ambit. And the prize and sort of a substantial part of the revenue that comes out of performance of that sport would be taxable in India. But again, like I said, the ancillary activities and the revenue in relation to some of the support staff and ancillary activities concerning the event would not be taxable in India. Sure. Go ahead.
Thank you so much. Now we have just touched on chess. I think there was Bobby Fischer, a famous US chess player. What would be the US perspective on that, George?
Well, I'll say, first of all, I'm not quite sure for a chess player. But my initial hunch is that you would say probably not fall into to the article for athletes and entertainers and sportsmen. Maybe he's an entertainer, but I'm not sure. So in the U.S. in many of our treaties, we do have a similar article as in the model treaties that we've been speaking about. So the general rule is that one of these athletes or entertainers would be subject to U.S. tax for performing in the U.S. In some of our treaties, though, in this article, it says, so I read what the model treaty says, an athlete or entertainer, artiste, subject to tax in the country of source. But then some of the treaties say, unless the compensation is below a certain threshold, right? And so because Ed Sheeran, I looked up the UK treaty and it says, unless the compensation is below $20,000, in which case the US would tax it. So when I think about our fact pattern here, Ed Sheeran obviously is going to get paid more than $20,000. And so he would still be subject to tax, but perhaps he has a backup singer or a guitar player or someone who's getting paid $15,000. And so maybe they wouldn't be subject to tax. There are some other treaties where the threshold is only $10,000. So they would probably be maybe swept up in that. When I think about, yes.
You're talking about whether they are subject or not subject to the special regime. Let's assume Ed Sheeran, he's not coming alone. He has something like a director setting up the show, the choreography, taking care. And let's say there is even, the show is broadcasted and there will be later on something like a documentary, Ed Sheeran concert live, and then you can see that, on TV or on the internet, the show about the concert, the director. And I know in the US, Hollywood, Oscar, as a director, you might win an Oscar. Is the director also subject to the regime?
I would think so. There's some sort of combination of argument of an entertainer and artiste. I mean, what they're doing is they're not. That's the type of services I think that they're performing. So I view it as similar to what Ed Sheeran's doing.
It's the motion art, the performing art, getting an Oscar. But Neil, what would you think about? Is a director of a movie, of a show, also subject to this regime? They may get big pay,
Yeah. Well, first, thank you, Thomas, for organising this. It's great to see everyone here today. The boundary issues as to when a person is subject to Article 17 and when they're not can be quite difficult because, of course, Article 17 is largely a performance-based concept, particularly with reference to theatre, motion picture, radio, television, or a musician, and then or a sports person. So it's not always clear where you start and where you stop. In your case of a director, the director per se would not, in my view, ordinarily be an entertainer. But if that director is actually the subject of the documentary or the program, was part of the talent behind the storytelling, then they could well become subject to the regime. And then you've got the question of which we'll probably move on to shortly, but what is the source of the relevant payment? Because, of course, in order for Article 17 to override the ordinary business profits or employment OECD provisions, then typically Articles 7 and 14, then typically you're going to have to find that there is a source in that country before you can apply it. And then you have to look at, obviously, at the domestic law relevant to the payment of that kind. So it's not easy, and I think one of for all those 1930s kind of reasons that you outlined at the start, Thomas, maybe the world was a simpler place nearly 100 years ago, because now you can have people who are the star of the show incidentally, as it were. Ed Sheeran's lighting engineer probably brings, quite frankly, just as much, and sound engineer, they probably bring just as much benefit and create just as much entertainment as Ed Sheeran himself, in terms of the wow factor for audiences, and driving value.
We see there is huge gray zone and difficulties in line drawing. And maybe just for all of you, my last push, if you allow to this topic, nowadays fashion is extremely popular. And in Paris, Milano, elsewhere in the world, Tokyo, there are these fashion shows. There are the models walking down the catwalk. There is music. There is a big audience applauding. Is a model walking on the catwalk, is that model subject to the special regime if she gets some pay for doing that? What would you believe? Anyone being excited to make a try?
Well, Thomas, when it comes to models, my understanding tells me that they would definitely fall within the regime, because you see, the test that you usually apply for Article 17 is, broadly the close connection test. So when the activity, which could be an entertainment activity or it could be a sports activity, anybody who's closely connected with the activity, the taxability of that will fall within the special regime. So when you take the example of a model, then a fashion show cannot take place without a model. A fashion show may take place without maybe music to some extent, or certain ancillary sort of aspects, but without a model there's no fashion show. So in my opinion, definitely models would fall within the ambit of the special regime. People who assist those models, the regime for them would be a little more complicated. One, because of the monetary thresholds that George also spoke about. So that's there in many jurisdictions. So those people may, but the income for those people may fall below the monetary threshold. And secondly, their employment may actually come within the ambit of Article 15 and not the sort of special regime that has been put forth by Article 17, because I believe most models work as independent contractors, but people assisting them work as employees. So yeah, I mean, but models definitely would fall within the ambit of the special regime.
Thank you. Thank you very much. And I'm quite certain if you talk to a model, the model tells you I'm an artist. But it's also surprising if you look at the OECD commentary, the commentary to this Article 17, it rather says likely not actually, but things evolve, and maybe in 2-3 years we have to discuss about whether an avatar, something like an electronic model walking down the catwalk creates some taxation at the event location. Thank you. If nobody has any further comments on the taxpayer, maybe we should move actually to the person that has to collect the tax, report the tax, and pay the tax to the government of the jurisdiction where the event is happening. Who wants to take the lead on that? Yoshi.
All right. Yeah. Let's go back to the fact pattern where the Japanese event organizer will be paying certain fees to the Ed Sheeran's private company, and then a private company will be paying Ed Sheeran himself a certain remuneration. In this case, as in the other jurisdictions, Japan levies the withholding tax on the fees paid by the Japanese organizer to the Ed Sheeran's personal company located in the UK. The withholding tax rate is a 20.42%. It is notable that not only the fees in the strict sense, but also the certain reimbursement of the out-of-pocket expenses on the side of the Ed Sheeran's private company, such as airfare, transportation, meals, and some other costs, will also be subject to the withholding tax. This has raised some dispute in Japan, attracting the taxpayer, alleging that it's a cost reimbursement, so should not be subject to withholding tax. But the court rejected that argument, and so in short, everything will be subject to the 20% withholding tax here in Japan. That's one thing. And honestly enough, in our jurisdiction, Ed Sheeran's private company, which is a UK company, it would have to file a tax return as well, even if it has no PE in Japan. That's a rule. I should have mentioned that in relation to the Article 17, Japan respects the OECD position and substantially has the same provision as the model articles in many tax treaties. For example, with the treaties with the US and New Zealand and some other jurisdictions. So basically, Japanese domestic tax law consequences is everything here. There is no treaty benefits or no treaty protection. And on that basis, Ed Sheeran's private company will have to file a corporate tax return to report and pay the corporate tax income. This is a net basis taxation. So the Ed Sheeran's private company will account for the revenue as income, and then take a deduction as to the various costs, including the remuneration to be paid to the Ed Sheeran himself, and the remainder will be the net income to be subject to the Japanese tax. The rate is around 26%. And that is the large framework here in Japan. Yeah.
Thank you. That means basically, if there is an event organizer in Japan, there is withholding on the gross payment, I understand, the no deduction. And if there is someone outside of Japan, like the company of Ed Sheeran in the UK, then that company has to file a tax return.
Yeah, that's right.
But
Very
is
onerous.
there double taxation? Is there double taxation? First 20-something% on the gross, and then something on the net that has to be reported by the company?
That's right. As a tax professional, we may think that when the Ed Sheeran's private company files a tax return, the company should be able to take tax credit as to the 20% tax withheld. This is very complicated. I mean, the private company is paying remuneration to Ed Sheeran himself. Ed Sheeran himself is earning his income by the performance in Japan. So he himself should bear some Japanese tax corresponding to the service in Japan. But it is very onerous to request the individual artist to file a tax return in Japan. So what happens is that the 20% withholding tax is deemed to be paid on behalf of Ed Sheeran himself as well. And then by that amount, the withholding tax creditable at the level of the holding company is reduced. So yeah, we have that kind of regime. So technically, there should be no double taxation or something.
I see it's not that straightforward, actually. It's quite complicated.
Yeah, that's right. In my practice, I have handled the cases involving, for example, very famous Swiss tennis player and his company, and a very famous French football team. And in each case, this issue has come up. So, well, anyway, it's very complicated.
I see. But let's say moving back to the sports, actually, the fight, the fighters, they get some pay from the organizer of that event. And I hear in Japan, that's a clear case. There is a withholding tax to be withheld by the organizer, reported and paid to the tax authorities. But let's assume that these fighters coming to that fight, they are part of a national league in their country of residence, a big club, a national league.
Yeah.
And they get also paid by that national league, for attending the fight, the Rumble in the Jungle, 50 years ago in Zaire. They're getting also pay from the national league. And now the question is, who has to levy the tax? They get two pay from the organizer and from the domestic league. Can I actually defer to Neil? How would you deal with that in New Zealand?
Great question, Thomas. First up, and we were probably going to get to this point when we were talking about exceptions later, but there are commonly exceptions to Article 17 for national leagues. So that's one possibility. You would need to look at the relevant treaty to see whether or not there was an exception inside the treaty. That is after looking, obviously, at the domestic law to see if there is any exception applicable. The typical situation where a person is simply receiving employment income, not for their entertainment or sport or appearance in the jurisdiction in country A, in our example, The typical answer would be that it is ordinary income. It is a salary or a wage or a similar type of income, and that would not be subject, certainly in New Zealand, not be subject to tax because it will be employment income not relating to that particular performance. If, however, it was related to the particular performance, such as a bonus payable to the winner of a fight from the league, that could become problematic because you then have the question of whether the league itself is subject to tax, and whether there is a source in New Zealand, for example, so that the revenue can actually enforce the 20% withholding. And there may well be jurisdictional and source difficulties in that regard. Yeah, so quite complex because you then start to get into the interplay between the other articles in the treaty and also any temporary or short-term provisions relating to employment income under domestic law, for example, being present in New Zealand for less than 90 days does not create a liability for income tax.
See that, but let's say instead of Ed Sheeran, we have an orchestra going on tour, going maybe to the US and actually having a great performance orchestra, philharmonic in the US, having several shows in the US going around. And normally the members of the orchestra, the musicians, they get a monthly salary, they get a regular pay. And of course, whoever is organizing this turn will also have to pay some money. What will be the US view actually? Is it only the portion that is paid out from the organizer in the US, which would be subject to tax? Or is it also the regular salary the members of the orchestra get during their tour during 1 month in the US?
So I think the US view would be that the people performing the services in the US would be subject to tax in the US. Again, unless there was some, like, right, what we talked about earlier, some exemption under a treaty because of the services were below a threshold amount. And so for individuals, there generally there's required to be withholding. And I was thinking about some of these various different fact patterns that you can have, for example, like a corporate entity who's earning income is what we would call income that's effectively connected with U.S. trade or business in the U.S., and they can ask for an exemption from withholding. But for a person who's whether I think performing dependent services or independent services in the U.S., there's not an exemption from withholding from them. So it would be subject to withholding. And then they would also have a requirement to file a U.S. tax return because the withholding would be generally, I think, on a 30% basis, although the tax rates and the brackets or bands about what they actually owe could be less or more than that. So it could be in their interest to file a tax return because they may actually owe less taxes than 30% rate. But then they can also potentially claim, deductions for expenses that are associated with earning that income.
I see. Okay, thank you so much. Let's move on. And maybe the next one, what income is subject to tax? We already had quite some discussion on it. But again, here, I would like to challenge you a little bit, That means we all know that there is a big payment by the concert organizer to Ed Sheeran or his company, actually. We all know that. But that's not all about it. As you all are well aware, there is a lot of additional activity, There might be quite some advertising, be it in the concert or be it in the sports event, in the fights. There is a lot of advertising. Maybe that one of the fighter has something like a T-shirt or something like a coat by coming in to keep him warm. and there is a nice logo from a sports gear producer, sports equipment, big logo, and every sports person is getting also some pay from that manufacturer of sports gear. That pay for just showing the logo when starting the fight. Logo, I'm fighting with that equipment. Is that something which is subject? Is that kind of income subject to the special regime? I think, Yushi, you say yes. What do you think?
Yeah. Actually, yes. Actually, yes and no. Yeah. Among the items listed here, the performance fees will obviously be subject to the special regime. I think no one should disagree. And the problematic part is for example, merchandise revenue. I think this may not be a consideration for the personal services as a athlete or as an artist, but rather is a consideration of the grant of the royalties, grant of the trademark, meaning royalties. So as the merchandise revenue, I think the merchandise themselves will be sold by the Japanese organizer, and then it will earn income, and then the organizer will be paying certain royalties to the Ed Sheeran's personal company, which is a trademark holder, maybe. In the case, the consideration should be characterized as a royalties. And then it will be subject to the 20% withholding tax and the Japanese domestic tax law. But as in most of the tax treaties with the advanced countries, royalties are generally exempt from the Japanese withholding tax on the treaty. And so we have to make a distinction between the consideration for the personal services and the royalties for use of the trademark here. That is the one issue. And another difficult part is the distinction between the royalties and consideration for the publicity, meaning, paying a payment for the publicity is technically not a royalty here in Japan, so is not subject to the withholding tax and the Japanese domestic tax law. So we have to make another distinction, which means that whether the consideration is the is royalties or consideration or the publicity rights of the artist. Yeah, that is an overview from my perspective.
I think the OECD Model Convention, the commentary to it actually says there must be a close connection between the income and the performance. It has to be performance-related income. And I think that reflects a little bit also the position in Japan.
Yeah, that's right.
George, would you agree from a US perspective?
Yeah, so
I understand that one sportsman, it's a man actually, a baseball player just entered into the first 700 million contract for the next 10 years. We're getting close to the 1 billion. Now, that's maybe not all. Please, George.
Sure. So we actually have some guidance from the IRS where I think it's similar to what you were saying a minute ago is looking at what is the purpose for what the person is being compensated for. So going back to the example of a model, there was a case where the IRS said, look at what the model is doing. If they are they acting in sort of an entertainment situation, or is that the purpose of what they're doing, or is it for another purpose like endorsements? And so if a person is doing something that's entertaining, that may fall under the relevant treaty provision we've been talking about. On the other hand, if it's something like just like endorsements for advertising, that's not really for entertainment purposes, for other purposes. And so it would fall out of that article, that treaty article. Although it could, as Ira says, be impacted by another treaty article, right? So as an independent personal services, for which there is maybe that person has a fixed base, a fixed office, which then could still be subject to tax in the country of source. And I was actually thinking, I have a client who is a model, and thinking about what she does. Ed Sheeran probably, I wouldn't be surprised if he has some sort of office in the U.S. Whereas my client who's a model, she flies into a country. She goes to some performances where it's almost like a Victoria's Secret fashion show, where you could say it is like entertainment. And then you have other situations where she literally goes to a hotel room. She goes to like a warehouse. She does a photography shoot in that country, and she flies back out. Very much not entertainment. And so I think you would look for it to another sort of treaty provision there. And if it was someone in the US, I think who was kind of flying in, again, you look at it as a Victoria's Secret show, where it's probably an entertainment, or are they just, being photographed here, or are they just for modeling or for advertisements or endorsements, which would probably not be in that treaty article.
From my side, one last question. If the show does not happen, the concert does not happen, the fight does not happen due to pandemic, due to acts of terrorism, a threat, or whatever, it's cancelled. It's cancelled, but at least the organizer is still giving some pay to the artist, some pay to the sports person. Is this fee, cancellation fee, this pay, is that subject to the special regime? Anyone taking? Yeah, please.
Yeah, I think it will be subject to the special regime, depending on, again, just to add to what Yushi and George said, depending on the kind of performance that is taking place. So the event in its totality will have to be analyzed, and the different parts of the event will have to be seen. So if a cancellation takes place and some payment is to be made to the main performer, that will still be subject to the special regime, because performance had a very close connection with the entertainment or the event that was taking place. So that aspect will remain intact, even if the event eventually does not take place because of some unforeseen events. And in those cases, there are contractual agreements also which take care of how taxation will happen. You have force majeure clauses and other aspects. So yeah, I mean, I do believe taxation may still take place if the payment, because consideration is there. So once consideration is there, then I think taxation will come in. And just to add, just to add one more point to Thomas, what you were saying earlier, in relation to, sponsorship and sort of revenues related to that. Again, I just, want to add that you were absolutely correct in saying that the OECD Model Convention comes up with the criteria of close connection. And within that ambit of close connection, we have to see two aspects. One is, of course, the nature of performance taking place, and whether the performance is taking place during the course of the event whose proceeds are being taxed. So I came across an example where I believe during Wimbledon, there was, a very popular sort of tennis player who wore a t-shirt with a specific logo for promotion purposes, but that t-shirt was not worn during the course of the match, but at maybe an after party or one of the sort of media reporting sessions. So the taxability for that was very different from the taxability of something that was worn during the match, because wearing the logo or sort of promoting a particular thing during the course of the match would definitely fall within the special regime, and other events or sort of aspects in which the sports person or the entertainer indulges would fall outside the ambit.
Thank you. Thank you very much. For me, that, of course, surprising if the performance does not take place, you still have a close connection to performance. If it doesn't happen, it's still a performance of not letting it happening. Great, great. Last challenge, and then we have to move on. A horse race, not a fight. A horse race, you have the jockey sitting on the horse, riding the horse, and you have the horse. We're not talking about the jockey, but the horse owner, the stable, is also getting quite some fees for letting the horse race in the race. Is that subject to this tax? Neil, take a chance.
Not in New Zealand under our guidelines, and it will be subject to tax as a separate matter. Because it's New Zealand sourced income, but not under Article 17. No. It's a short answer, Thomas.
The horses are not subject to Article 17. That's great news, but I think it also applies Formula One racings to the team owning the car. That means the car is also not subject to this special regime. Great. Let's move on. Next topic, actually. And in the interest of time, maybe the last one, the double tax treaty implication. How is the tax levied and how actually is double taxation avoided? And we have already heard that maybe, Yushi, you said in Japan, when the organizer is making a big pay to Ed Sheeran or his company or to the fighters, there is withholding tax. In the residency country, the question comes up whether there is exemption or whether there is credit. And I would guess most jurisdictions are on the credit method, but having heard that there is something like a 20-something in the Japanese context or a 30% withholding tax in the US context on a gross payment, does the credit method really work? Who wants to take that question up? Does the credit method work in that context?
I could kick off if you like, Thomas. There's in this jurisdiction anyway, there's a choice. You can either file or not file. So the artist could take a tax position which was simply to accept that gross withholding, in our case 20%, and that's a final tax. They walk away from this jurisdiction, and that's the end of the matter. However, and this is a modelling exercise for the promoters and the artists and their advisors, it may be that there are significant expenses which will reduce that income below 20%. And it may also be that some of the income is either not subject to tax because it's not attributable, and there are some cases on that, or it's not subject to tax at the 20% rate because it's a royalty and subject to tax at 15%. So it's a very long way of saying that it depends, and you have to look at each situation and the nature of the underlying funds flows, precisely what they're for, and precisely what the relevant expenses are. Just to give you one little example, if you're making that decision, it could well be that you have Ed Sheeran is, for example, coming to New Zealand, but he's also going to Australia. He could have 4 shows in Australia and 2 shows in New Zealand, and the expenses might need to be apportioned as between the 2 jurisdictions for the total tour cost. So there is some sort of practical aspect to this as well, because you want to ensure that each jurisdiction, in this case Australia and New Zealand, are allowing the correct amount of a deductible expense, and you don't end up either with double non-taxation or double taxation.
It means you have an option in New Zealand. You can actually register as a taxpayer and file a tax return with application of all the deductions apportioned, or you can say, let's take the withholding and walk away.
Yeah, that's correct. And I don't know if we'll get time today to talk about the VAT, GST consequences, but there are other reasons why you might want to register your taxpayer entity. As Yoshi has said, the Ed Sheeran's company, you might want to register that entity temporarily for GST purposes in New Zealand because of the input tax credits that are available for expenditure incurred while here. So there are some real, again, it's a modelling exercise. You have to weigh all of these things up. I think it's fair to say that for the large shows, the Ed Sheerans, or in fact tomorrow night we have Coldplay here in Auckland, and so those big concerts, they will have a registered entity, and they will be filing returns.
Okay. Anybody to add something on that? It's interesting. Do we have this option in all the jurisdictions? We can pick and choose which methodology we want to be subject.
I think in the US you don't have an option, and you wouldn't want to not file, because as we were saying, you would want to claim your expenses to lower, right, the tax rate, because and you may ultimately still owe taxes because of the 30% rate of withholding, but the highest rate of the applicable tax amount when you actually have to file is 37%. You may still owe taxes, and you of course don't want the IRS coming after you.
Okay, thank you. Okay, let's move on. Let's jump a little bit. We already touched on it slightly, exemptions, minimum thresholds, and the like. And there are other special things like leagues. As a European, soccer is very popular here. And if you have a league, one day you have a match in country A, and the next day it's in country B. And it's always like this, country A, country B, because there are always two matches between the same two teams. Each time one of the team is the host of the other team. That means it happens first in country A and then in country B. There's a lot of complication with all these tax rules, but at the end of the day, as it's happening one time in each country, there is not much sense in doing that. Could there be an exception to this rule that we say, why should we have the special regime? Because overall, each of them is playing once in the other country, and they should just pay the taxman in their own country. Are there some kind of special rules or special events? Yoshi, what do you think?
Well, I think you're effectively saying about the de minimis exception or something. We do not have that. So even though the artist performed in a certain hour, in a day, during the year, that portion will be subject to the Japanese tax. Yeah, absolutely. So unfortunately, the answer is like that.
Mm-hmm.
One thing I can think of is relevant is in the United States. I think there's a provision in our treaty with Canada, specifically about hockey players, and because they're going back and forth between the U.S. and Canada every day and trying to give them relief. I'm not sure. I think it would apply as well to like the NBA because there's a team in Toronto as well.
Mm-hmm.
I think a lot on this aspect would depend on the DTAs between countries, because you see, performance of sporting events is also an aspect. There's no equilibrium in that sense when you see how many events take place in countries across the board. So for a country like US, you would have many events. In Europe, you would have many events. But say for a country like India, you would not have many international events. So the example that you spoke about, Thomas, it may not be very feasible in terms of taxability for a country like India, because they may not have that event in India, on a very regular basis. But yeah, like in India, we have cricket, which is a very popular sport. So with countries with whom we have, we play cricket regularly. Definitely, I mean, this sort of an approach could be very useful, where when the event takes place in that particular country, you apply the source rule and you sort of tax accordingly.
Thank you. I think we are almost there, but we have started 3 minutes late. The last slide, and I know, Neil, you are very keen on that, the VAT GST, which might be also quite a heavy tax burden. And my question would be the arts and sports subject to VAT or GST? I guess in Switzerland, in principle, it's exempt. But Neil, please go ahead.
Yeah, so it's not exempt here. So GST, for example, was paid on your ticket price. The person's ticket price is collected by the promoter. The promoter pays GST, and any entity that is running bringing a person in, say the UFC, if you have an entity doing that, or bringing Ed Sheeran in, needs to work out whether or not they are going to incur GST expenditure while they are here. And if they are, we have the facility to register temporarily for GST. So the entity can, subject to some de minimis requirements. So the entity can come in, register for GST, broadly, if they're entitled, for example, if it was Ed Sheeran's company and it was entitled to, it was registered for VAT, it would be a very simple process. And then it can recover the input tax credits on the expenditure it derives here. There are some reasons why you want to consider that GST or VAT registration. The other related issue, of course, is customs payments. The need to you can avoid a carnet approach, which might or might not be available with an appropriate registration and input tax B2B arrangement.
I'm not a VAT or GST expert, but what I learned from my colleagues, this is the only tax sometimes you love to be a taxpayer, because that will allow you input tax relief. And if you are exempt, you are stuck with the tax on your inputs. That means the tax on whatever kind of services, supplies, goods you receive. And I think that's the good news about indirect taxation. It's nice to be a taxpayer because you get some relief, but there is the downside. There is no double tax treaty on VAT or GST in place. I think that's a good point to stop. I want to say a big thank you to the panelists, a big thank you for the audience attending this seminar. As a conclusion, my personal conclusion is there are plenty of opportunities for the well-advised, and there are many traps for the unwary that you might fall in and get stuck. Thank you so much. May I ask Rhonda to open the audience to the panel? And I would like to ask my panelists maybe stay a few minutes, and maybe there might be some interaction also with the audience. There might be questions, comments, and the like. Thank you so much.
Hi, this is Rhonda from the Secretariat. I will change all attendees to be part of the panel. That means that you'll come up on screen. You don't have to have your cameras on, but this will allow you to converse with the panelists and network with each other. So I will start doing that now. Sorry, I have to do it one by one. So it may take a little time, but you're welcome to join us.
So.
Some have declined. I think some have joined. I'm hoping it worked.
Hi, Sangna, I see you have joined, but you're on mute. Maybe to the panelists, what is the outcome of all these special regimes? Unfortunately, fun is also heavily taxed. Huh? The more fun you have, the more tax you have to pay. It's just about allocating revenue between the jurisdictions. And as history shows, as there is big money at stake, there is also big appetite to tax that money. And I think one of you said, if there is money, there is a taxman taking part of it. And that's certainly true also in this respect. Would anyone from the audience actually say something, provide some comment? I see that you have joined, but you are all on mute. Maybe could you unmute and say quickly hello? Nobody dares.
Saw that Liao Wang from Finlayson in Adelaide has just had to go, so she's in the chat. She's thanked us for the presentation, Thomas. So that's nice.
Yeah, I just saw the chat as well. Any comments from your side, panelists? Maybe.
One thing I'll add is, as I was preparing for this, and I was doing some research on the taxation of gambling winnings and betting winnings for non-U.S. persons. And while they're generally subject to tax, there is a specific code section that exempts certain types of gambling winnings. So blackjack, baccarat, craps. If you're a non-U.S. person, come to Las Vegas and it's tax-free. But if you're betting on UFC or football, you will be subject to tax.
And this kind of gambling industry, the gambling industry is huge. I understand in the European context, all of the gambling is actually in Malta on this little island because they have a very, very open regulatory regime and a very advantageous tax regime for the gambling industry. And beside the gambling, there is the gaming, online gaming actually, which becomes very, very important and a big business. That means, of course, you can race a Formula One car, but you can also participate in virtual racings, by gaming, for instance, and also fightings. You can do something like a box fight just in the gaming with avatars, and there is also a lot of money at stake in that industry. And I guess the rules are all but not clear, I would say, about taxation of this gaming activity. I really appreciate the comment from Yushi that in Japan, if it's illegal, you don't tax it. Would that be shared by anybody else, actually? In Switzerland, even if you earn money illegally, it's still fully taxable. And if you don't report it, you commit the second crime.
Yeah, no, the situation's the same in New Zealand. Yeah.
Okay.
Sorry, Gibran.
Okay, I do not want to hold you on for too long, actually. It was really fun to do this with you. And again, thank you so much for all the support and all the time dedicated. but it's a fun topic, and I had quite some fun in going through the process and having this webinar with you. Maybe certainly we could not address all the detail. There is a lot of complexity, as was said, right, actually, a lot of detail, a lot of gray zones, and there is a lot of development, and probably we should consider maybe at the late stage to give a second try and then look also a bit more into specific details and sort out how these are dealt with in the various jurisdictions and what are the challenges actually.
Yeah.
For that reason, I say good night to Neil.
I'd just like to thank you, Thomas, for your energy and enthusiasm, and everyone else on the panel for speaking. It's a very interesting topic, and in fact, I told some of my colleagues that we were having this session, and I am involved in organising the New Zealand Law Society's tax conference next year. And everybody got very enthusiastic about this topic, and they want to put it on in the conference as a session. So you know, your influence is spreading, Thomas, to a wider group.
And I really want to know how actually the America's Cup, New Zealand was winning it 3 times in a row, a real hat trick. But it didn't happen in New Zealand, actually. how that money got taxed, actually, outside of New Zealand. And then, of course, for the team in New Zealand, because that was just great, yeah.
Yeah, I couldn't tell you, I'm afraid, Thomas, even if I knew. We're all now watching the Vendée Globe because that's the real sailors going around the world as from Sunday, from France. So they're the real sailors, I think.
Even 2 Swiss teams participating, one male sailor and one female sailor actually participating. It's about 80 days. It's something like 80 days to take about 80 days, like Jules Verne, 80 days to get around the globe.
Yeah. Non-stop by yourself. That's pretty tough.
Great. Okay, thank you so much. Have a good day. Have a good evening, and hopefully talk to you soon again. Take care. Bye-bye.
Thank you, Thomas.
Bye.
Thank you, Randa. Thank you, Randa, for all.
Thank you, Gibran. Thank you, George. Nice meeting you, George, for the first time.
Hi. Nice to meet you.